All right, happy Friday, everybody. I'm Joe McKiddish, and today is my 14th day of investing in order to pay my bills with dividends. It's a beautiful day in Idaho, a little cloudy today, which is actually kind of nice, keeping the sun off of me. Smoking a La Aurora 115 year cigar. It's actually pretty fantastic. Had these in my humidor. It says 2018. I'm not sure if that was the one I put it in there, but it's got to be pretty close to that. So it's been aged quite nicely, and I'm enjoying it. So got my fire going, and we're going to get into some investing. I got some exciting stuff to go over. Number one is somebody signed up for Robinhood using my link below, and I got an extra $5. So as I've said in previous videos, anything I get that from any source on this, whether it's Snowball, somebody signs up for Snowball Analytics using my link, or Robinhood, or if YouTube decides to pay me some money, I will put all the money into this account and we'll invest it. So I'm up to $10 so far from Robinhood on people signing up with the link. So that's almost a share. Doing pretty good, you know. And that's how I think about freedom. Is I get my freedom one share at a time. So when I first started investing, it went kind of slow, kind of like we've been seeing over the last 14 days. And then it started speeding up. But every day I'm like, I got to buy more shares, got to buy more shares, got to buy my freedom. And that's how I thought about it. And it worked out pretty good. You know, that kind of mental state that I was in, where I'm like, I just need, not mental, but like, you know, the mentality I put it into it was every share I buy is one share closer to me being financially free. And, you know, I would even judge it like I'm about to buy some cigars. I already have some cigars at home. Should I buy one or should I buy a box? I'm going to buy one and, you know, take the extra money that I would have paid for those cigars and invest it. And, you know, I got a little crazy with it, you know. I bought a Prius and I drove that thing around, and I'm like, for like 7 years, I drove that car and got made fun of. And people were like, you're doing well in your business and financially and whatever, while you're driving that stupid car. And I'm like, well, it gets 55 miles a gallon or whatever it got, and it was awesome. So, you know, every tank of gas that I put into it and the money I saved, I invested it, and that's just how I thought about it. So now I don't drive Prius anymore, but pass that one on to my daughter. But you know, the thing about it is you, as you are starting this off, you know, I talked a little bit yesterday about, you know, being disciplined and being consistent with it, you know, and the thing that the way I thought about it is what am I willing to give up, you know, so that I don't have to worry about money ever again. And that was the thing I got into. All right. So enough of my pontificating. I'm going to go ahead and share my screen, and we're going to go over some investing, and you're just going to watch me invest my money. But there's some interesting things I added in, and I did some math on margin and where we're at. And so I'm going to go over that math, and we're going to figure out what we're going to do from here. All right, I just realized that my microphones that were connected up was the built-in microphone for the laptop, and it probably picked up a bunch of noise from the fire and everything else and all the birds chirping. So hopefully I'm hooked it up to the right mics now, and it won't be so loud. So, let's get into it before I start investing. Let's start this off. Drink some coffee, and I'm going to get into it. So I'm not a financial advisor. None of this should be considered financial advice. This is really for entertainment purposes, mostly my own entertainment. So most of what I do is to entertain myself. And if you happen to be entertained at the same time, great. And I'm just sharing on here how I personally invest my own money, some math that I did around it, and we're going to see if it works. You know, investing is dangerous, you know, as far as you could lose your money. I've lost money on investments before. You know, a friend of mine years ago calls me up, and he's like, it's probably, you know, 15 years ago. It's like, Joe, got this hot stock tip. It's right now it's at $2 a share. It's going to go up to 15, blah, 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 blah. I got all this information, insider stuff, whatever. My friend works there, that kind of thing. And I'm like, all right, I'll put $1,000 in, you know. And of course it went down to like 10 cents a share. And so needless to say, I don't do that kind of thing anymore. And I only focus on dividend investing. That's just for me. If it's not for you, that's fine. You know, go find something else to do with your money. So for me, for me and my family, as the Bible says, for me and my family, it doesn't say this part, but dividend investing is the way, right? So that's just the way that I like to invest, and it seems to be working out pretty good for me. In fact, if you go back to the old days of investing, like my grandparents and that kind of thing, they did do some buy and hold, like sells. They sold stocks, so they'd try and buy low and sell high, but they did a lot of dividend investing. They're not the ones who taught me how to dividend invest, although they did talk about it, but didn't stick. It didn't stick in my head that it was something I should do until later. And then I got a mentor, almost 15 years ago, who was big into it. And he was like, always take your active income that you get from your business or from your job and invest it and into dividends and, assets that pay, that's kind of the thing. And so I kind of took that to heart, started the process, started doing some investigation, and I came up with this thing I call the wealth snowball. So this is all my personal bills, range from the cheapest to the most expensive. And the way that I came up with this is one day I was thinking about Dave Ramsey's debt snowball and how it does some people a disservice where they'll get out of debt, but then they don't have any money. And so then their car breaks down, then they're back into it again. In fact, most of the people I know who've gone through Dave Ramsey's programs, that's what's happened to them. And so I wanted to come up with a way that made more sense to me, where I'm like, how can I prevent that from happening to me? Right. So, how about if I pay for my whole life with cash flow and dividends, then I never have to worry about using credit cards other than to get the points. And so that's where we're at, So I built this thing called the Wealth Snowball, and that's where it came from. And I used it the first time. It took me forever to get that first bill paid, and because the high yield stuff that we have now didn't really exist. I did a lot in like Altria Group and Main Street Capital and that kind of thing, and those have done great for me. By the way, I still hold a lot of shares of those in my primary account that pays my bills, but really the stuff that exists now, the ETFs and the cool infrastructure, tools that we have like Robinhood, Snowball, all these things, they just didn't exist. Margin was unaffordable. So, the way that we can build this thing now, I did it in 3 years last time. And so I'm going to see if I can do it faster with this. So as you can see, all my bills are here. No need for me to do the math. You can do it yourself. Obviously I'm missing some stuff here like phone and internet. Some people pointed out that's because my business pays those. And then there's no health insurance on here because I don't have any health insurance. I use dividends to pay my medical bills. So that's what that's about there. All right. So the strategy, I'm investing into the weekly paying ETFs. So, and I know that Roundhill has a thing called weekly pay, but these are, I count any ETFs that pay weekly into this list. All right. So I'm going to go through what those are. By the way, all this stuff, everything that's in here, all these tabs, there's links to all this stuff below. So everything is free. I do have links to Robinhood and Snowball. Somebody's like, how are you going to get paid for this? Are you going to start a Patreon? In fact, somebody asked me to do it yesterday, and I'm like, nah, I'm not doing that. I don't have time to mess with that stuff. But if you want to sign up for Robinhood or Snowball using my link, anything I get paid from those guys. So Robinhood apparently gives me $5 if you sign up for a gold account. And like Snowball gives me like $5 or something. So anything that I get from those guys, I'm going to transfer directly into this account, and we're going to invest it. All right. So I'm going to buy shares of those weekly payers evenly, one at a time, even number. And then I'm going to invest $300 a day into those weekly payers of my own money. Nobody else's money, my own money. Somebody asked me where that money came from. I earned that money. That's my money. And and then I'll reinvest all that money until all the dividends until $400 a month in distributions is reached. We're about a quarter of the way there, a little over a quarter of the way there. So in 2 weeks, almost 3 weeks of investing time, I'm about a third of the way there, almost a third. So a third of the way there, and we're going to get crack-a-lacking on fixing that. I want my dividends next week to really be bumped up. So we're going to take a look at how we can do that. I'm going to maybe use a little bit more margin coming up. All right. So margin will be used once the account has reached $2,000 in value, which it did I guess it was over a week ago. So on the first, and then once the weekly payers are $400 a month, I will split the $300 a day evenly between weekly and monthly payers. So I'm going to be using monthly payers into, I'm going to be using monthly payers to pay the bills. So that's kind of what the goal is here, is to get these monthly payers to pay the expenses. So my goal here with the weekly payers is get a total return of 35% across all of them evenly, or not evenly, but like average. And then my goal with the monthly payers is to do a 10% return, which means that I'm going to have to get monthly payers that pay higher, than normal. Getting into a Main Street Capital, smart, definitely smart in my opinion. I own a boatload of Main Street Capital, but it would probably fit this, but it's not going to get me free fast enough. And so I'm going to probably save that for phase 3 of this portfolio. Phase 1 being the weekly payers, phase 2 being the monthly payers, and then phase 3 is long-term hold type stuff that will pay my bills throughout time. All right. And then I'm going to document how many days it took me and to hit each one of these. So you're talking like, I'm on day 14 right now. I haven't even started buying the monthly payer, so we're going to see how long each one of these takes to hit. So we're going to do that, and then here's the portfolio that I'm using. Weekly payers are over here. I'm pretty tech heavy. With blocks is crypto. Maggie is Magnificent 7. I put links here for you guys if you want to research these yourself, knock yourself out. And it's easy for me to go look at them. And I might even in a future video, I think I'll go and show you. I'll click on these and show you why I chose these ones. Some of them have been great. In fact, almost all of them have been great. There's 2 that are kind of sucking right now, and we're going to go look at those and see how bad they're sucking. But as of yesterday, they were sucking pretty bad. So, so we got HOOW in here, which is Robinhood. I'll just skip to that one because the reason I have it in here is 100% because I'm using Robinhood and I thought it'd be fun. That's it. So HOOW is a weekly payer that pays, does cover it's a swap strategy that Roundhill uses. And we will actually go through that strategy, what they're doing to earn that income in a later video. And then the top W, that's the Roundhill's weekly pay universe. And somebody asked me, what's that with W pay? And I kind of mentioned this on every video, but yeah, it was W pay and it did suck. Yes, I get it. It did suck before. I'm hoping it'll suck less now with their new strategy. We're going to find out over time. And then we got a couple of rec shares. So I've got Roundhill, I got Nicholas, Roundhill, rec shares, and then Tap Alpha, and then Yield Max funds. So just because I have more Roundhill funds in here doesn't mean I necessarily like Roundhill more. I'm not a huge fan of Yield Max overall, but Chippy's been doing quite well for me, and I have Chippy and Soxy in my main accounts, and those have been doing great for me since they started. So I didn't buy them right away, but I bought them within a month of them starting out when I kind of saw the trend of how they were going. And those 2 Yield Max funds have been doing great. I know somebody talked to me about Biggie yesterday, which is another Yield Max fund. And I'm going to look into that one and maybe add it to this monthly contenders list because I think it's a monthly. All right. So monthly contenders means the ones I'm looking into. Let me move myself over there to add as a monthlies. And before this video is done, and this is going to be a little bit longer video today, I'm going to go into some of these, and we're going to do a little bit of research. I'm going to use Snowball, and then we're going to kind of dig into which one of these might be a good option. And I'm just going to go, I'll highlight these, green, yellow, red. Red being we're definitely not doing it. Green is good possibility, and yellow is something we'll think about. But I'm only going to have 13 of these. I added some more from comments in the videos. This one is kind of interesting. OVL. I didn't know about this fund. Somebody commented it yesterday in one of my long ago videos from 14 days ago. And anyway, 14 days ago. And so I ended up buying some shares of that in my main account, and we'll see how it goes. So, I've got custodial accounts for my kids that are under the age 18, and I bought a share in each one of those custodial accounts of that too. So maybe look into that. That's kind of interesting. And I'm sure there's plenty of people who are like, Joe, everybody knows about OEL. Well, I didn't, so I don't know everything, apparently. So all the rest of these I hold in my other accounts, and some of them just in my test account. But that's where we're at with those. All right, and then now look at this math. This is kind of interesting. This is something I haven't done before. So I pulled this out of Snowball yesterday. Did an export of my holdings, and a couple things stood out to me. Number one is current share prices of those weekly pays are $346.84. And as you can tell back from here, how much am I investing per day? $300 a day. And so there's a problem there, right? Is I'm investing more per day than I'm putting in. And so that's why I'm eating into margin so heavy. I already knew that, but I wanted to see how much exactly I was eating into margin every single day. And it ends up being $46, which is far more than the dividends that I'm receiving. So I kind of did the math over here on this one, which is what the next payment's going to be. So this is next week, because there's no payments today. It's Friday, and we don't have anything that pays on Friday. But the 3164 is what I'm going to get paid next week, total. So needless to say, that'll almost cover 1 day's worth of margin. But I'm going to stack up 5 days worth of margin next week. And yes, I'm going to increase the dividends that we're getting, but we might have to adjust our strategy slightly in order to account for this. Because buying one share of each one of these per day is going to put us in a hole pretty fast, and may take me out of the comfort zone with margin. We're going to find out though. So Robinhood does give me $1,000 worth of margin at zero interest or no payments on that. And so, I may use the whole 1,000 to build this up to keep it going. But I would love it if the dividends were paying out equal to at least the overage. So if we can get the dividends up to that $46 a day, or $47 a day, then it'll cover that difference, and we can still keep buying like crazy people, which is what we want, right? And so, but that just tells me that when we start investing into the monthlies, we're gonna have a bit of a problem. So, the dividends are not going to increase fast enough to cover us adding the monthlies in. So we're going to probably have to adjust our strategy. Instead of buying one of everything every day, we're going to have to adjust that strategy. And part of that is that I added the Walmart rec share fund in yesterday. And so that spiked it up by $27.58. So that increased the amount of margin I'm dipping into every day. All right. So how much have we gotten paid? Total is $39.69 so far. And so here's all the dividend payouts. Somebody mentioned to me that the link to this sheet in particular is not in the description below, and I'm going to change that. I'm going to add that in today, so you can see what that sheet looks like. And I don't know what you're going to do with it, but you can look at it and you can follow along. And then once I start adding the monthlies in here, I'm going to create another column over here with the monthly payers, and we're going to track those dividends too. All right. So let's get into Robinhood. So today is yet another day when the market's going up, but it's not going up super crazy. So that's good. And as you can see here, I have $128.80 in cash. So cash there. And the reason I don't have $300 is because when I added the $300 this morning, it paid down the margin. So you can do the math how much margin I was using as of yesterday. So my buying power is $4,755, and let's go look at the margin stuff here real quick. And margin, there it is. So I'm going to click view more details, and we're gonna look at this real quick. All right, so let's see. All right, there we go. All right, so I've got portfolio value of $4,635. It says that I can use $4,629 of margin. I imagine that difference is that new B share of Berkshire that got added this morning from somebody signed up with my link below on Robinhood, right? So, but as you can see here, I get $1,000 interest free to use. And what is margin? Margin is a loan that you can take out. Essentially, they'll loan you the money and use your shares of stock as collateral. And so here's the problem with it, is if your shares of stock dip below a certain price, which is that maintenance requirement there, if it drops below that price, you get what's called a margin call, and they will sell your shares at the lowest point, and they'll take their money back. So we don't want that. And so I never really ever use more than 10% of my portfolio value in margin. I'm pretty conservative with margin. I've just known too many people to get into trouble with it. And so I'm very conservative with how much margin I use. We may be using that full 1,000 though, all the way up to where I don't pay interest on it in order to speed this thing up early on. So we'll see how fast I use up where I'm paying into margin. I'm just using margin every single day. So that's going to be a thing that's going to come up soon. So, but I'm going to get $10 out of this Berkshire B share. So B shares here, and I can't sell them yet. Apparently I need to hold them for 3 trading days, but so that's today, tomorrow, Wednesday. I'll be able to sell them, I think, on Wednesday next week. So I'll sell those 2 Berkshire shares, or Berkshire, not shares, but that $10 worth that I got from people buying or sign up for Robinhood using my link. Thanks for doing that, by the way, whoever did that. Love you guys. I will take that $5 and then we'll use it to buy more shares. So at $10, heck, I can almost buy a share of YES with that. So we're getting there. I love looking at it that way. $10 is $10. $10 is almost a share of my freedom. All right. So let's go ahead and buy these shares real quick. As you can see, PLTW, or is it PLTW, is our big loser here. It's down 17%. You know, makes me sad to look at it, but TSII, which is Tesla underneath, which Tesla's also been sucking for some reason, which is interesting to me because 2 companies that I think that are fantastic is Palantir, which is underlying under PLTW, and then TSII, which is Tesla. I believe both those companies are great. And oddly enough, Robinhood, HOW, Robinhood is down today. And I don't know why. I'd have to go look at it, but I do know that it's dropped. It was in the green yesterday. It's in the red now. And then the Walmart share that we bought yesterday is down about 1%. So we're in a dollar cost average down on that one. All right, blocks and all the crypto stuff is up. So I'm not sure if that's a trend or if that's just today. All right, so let's go ahead and increase our positions on these things and let's get ripping on that so that we can get into the other stuff I want to go into. All right, so bid is 1441. And the current price is $14.50. So we're just going to go to $14.43 and see if we can get pretty close in there. Turn up the volume. All right. And I do talk with my cigar in my mouth. It's a normal thing. Try not to do it too much on videos, but that's the way it goes. All right. So Chippy. Look at that. Bid price is $61.07 and the ask price is $61.24. I'm going to want to get that for as close to that bid price as I possibly can. HOW, I'm going to be able to probably drop my cost per share down pretty significantly. So you can see my profit PL, my profit loss is about 3.5%. So once I buy this share, let's look at this. It's going to be interesting. So 21.99 is bid, and that's actually the current price as well. So not much difference between bid and ask there, but we're gonna get this. Let's go to 21.98. It's dropped a penny since we started talking. Actually, let's drop this thing to 21.95 and let it sit while we're doing the other ones and see what happens. All right. So Maggie, I'm gonna go ahead and buy a share of that. Bid price is $45.37. Ask is $45.41. So let's go to $45.37. Let's go up a penny. We can get it for $45.38. NVII. All right. So some of these and the bid price and ask price are completely out of whack here. So, all right. So there's NVII. So now I'm going to get the PLTW, and let's see how far we can drive that 1633. That 16.33% basically is what I've lost on that share price. I haven't lost it because I haven't sold it, but it's not looking good, people. It's not looking good on that. So I'm going to see if I can drive this down, get my cost per share down, because my average cost per share right there is $45.70, as you can see right here. And, the current price is $41.50. Let's see if we can get it down to $41.48, and which is the current bid price, and see how that changes our total percentages there. So TDAX. By the way, the reason I dropped these prices down where I put these limits so low is sometimes they'll go through while I'm working on other stuff. So I'll come in here and in my main portfolio, what I do is I get up in the morning and I look at what shares I need to buy that day, and I'll go put them, especially on red days, I'll go put them in far below what the bid price is. So I'll try and get them, super cheap. So see, their NBII just went through, and sometimes if they even drop to that price, sometime throughout the day, they'll trigger. So I usually will go look at like 1:30 in the afternoons Mountain Time. So about a half an hour before the market closes, I'll go see which ones went through, and if they didn't go through, I'll push them. But you'd be surprised, about half of them, I'll get them for 10, 15, 20 cents below what the current market price is. So it's kind of interesting how that works. All right, so top W. All right, TSII. It's a little chilly out here. My nose is kind of. I'm like, why am I cold? The fire's going behind me. I think. Yep, still going. So all right, limit price 17.15, and then bid is 17.11. So we'll put it at 17.12. TS, that one just went right through. All right, TSYX. Limit price on that, and then the bid is 21.96. So I want it for 21.97 if I can get it. All right, here's the Walmart one. So let's increase our position into that, and then let's get that one as low as we can get it. All right, so bid price is 21 or 27.22. Well, I'll put in 27.23 and see if we can get that 32-cent loss, tighten that up a little bit. All right, so I'm going to increase my position on YBTC and YETH, and then we'll go back through and push those ones through. So this is kind of interesting. So the current price is 21.51, bid price is 21.51, ask is 21.52. So that thing's just not even moving today. We'll see if we can get it to go through at that current price. And then YETH, I didn't want to do that. Increase position, don't sell it. All right, so 1180, and we'll do put that at 1180, see if we can get it to go through. All right, so I think only a couple of those went through. Oddly enough, I think they were both of the rec shares one. Yep, TSII and NBII were the two that pushed through. The Walmart one didn't, though. Dang it. So let's start at the bottom, or at the top, as the case may be. Top over here, bottom over here. So we'll just go and replace these and see if we can get these to go through. So bid price has gone up to 14.46, and that's actually the current price. So we'll just push that up a little bit. All right, Chippy. Dang, Chippy. This thing goes up every day. So, I love that. And I hate that because it's increasing my cost per share significantly. So, if you like seeing share prices go up, Chippy's a good one for that lately. So, in fact, since I bought it, it's been not every day, obviously, but most days it feels like it's on a tear, going uphill. So, emotionally, that's good for people. Bad for me when I'm trying to buy my shares as cheap as I can get them, so that I can increase my my dividends per share. All things being equal, I would love it if things would kind of stay flat, and that way I can buy my shares at a consistent price. But um, on the red days, I'm excited because then I can buy my share price per share down. All right, let's see what we got to do this Walmart one to get it through. All right, bid price is 27.22. We're at 27.23. We're going to go up a penny on that one, because that one our average price on that is 27.60, and the current price is 27.23, which is not where we want to be. We want to be the other way. We want our I don't like seeing stuff consistently go down, is the thing. So hopefully that's not a trend with that. All right, YBTC went through. Let's push YETH through real quick. That one should go. Blocks. Chippy here, 61.11. Kind of interesting because the current price is 61.04, but it's still not going through because the ask price is 61.24. People are getting crazy with this thing today. I think everybody's on a high with that particular one. So I don't blame them. It's good. It's been good, and you'll see. We'll go back to we'll go to Snowball and we'll see it's kind of the winner here. It's been, if this was a competition between all these, it's been kicking ass and taking names, not just in share price appreciation, but like, the amount of dividends it's paying out is pretty fantastic. Looks like I was a penny off on all these. All I have to do is bump them a penny and they go through. So I was close. I was close on these, but yeah, they're just pushing through with bumping them by a penny. So you can kind of hear that chime going. That's the Robinhood chime of freedom right there. So excited about that. All right. See what we did here. All right, Chippy's now. I'm going to go 2 pennies on this because it's making me nuts. Let's just get her done. I didn't even do it. Some days this works out, and if you've been following me for a while and looked at the red days, and this was a lot of fun on red days because I was buying my cost per share down pretty quickly. And so, all right, so 1180, 1185 is the current ask. I'm going to go 1184 and see if that goes through. At least save myself a penny. Come on, people. So, yep, there it goes. All right. So now I own 15 shares of every single thing other than the Walmart one. And I'm only going to buy the Walmart one when it's on a serious down day. I'll buy an extra share. So if there's a red day that the whole market's red, and that one's down significantly, then I will buy an extra share of it so that I can bring it up so that they're all even. I like seeing even numbers over here. Obviously, the Berkshire shares kind of wonking me out, but we'll get that sold next week. And maybe some other people sign up for Robinhood, and we'll have more money to sell, to put into this. Because I'm going to need it. Because as you can see, I'm now $220 in the hole on margin. So I every single day that's increasing. So when I add my $300, I'm only going to have $80 in cash to invest on Monday. So if that tells you anything on how fast this is going to escalate into that $1,000, it's going to go pretty quick. If we're doing, the difference is going to be, let's go back over to this. I'm getting $46, let's call it $47 a day in the margin debt. And, next week I'm going to get $31 in dividends. It's going to be more than that because we're going to go refresh Snowball. But next week, I think let's do a refresh on this. Let's go ahead and sync it up. So right now, as of yesterday, I was at $1,633.72 in annual dividends, and so we're gonna backtrack the math on this and see what I'm gonna get paid next week. We'll just run that report again from Snowball, and we'll look at it again on Monday and see where we're at. But as you can see. Let's go. This will probably take us up to $1,756.17. What does that equal out to per day? It is not. It is not $47. So let's go look at what it is per day that we're going to get, and we're going to go to the dividend calendar and we'll go look at it at that. So per day, I'm at $4.77. So there's a disparity there between how much in dividends I'm getting per day and how much margin I'm going to dig into. So once I get closer to $1,000 in margin being used up, if the dividends are not paying down the margin debt fast enough, we're going to have to adjust the strategy to make up for it. So, all right. But that being said, we are at $145.16 monthly, which is fantastic. So that's getting us closer to that $400 a month that we're going to for before we start buying the monthlies. And so this is looking pretty good over here. And as you can see, how much money I made yesterday, which was the 9th, I made $10.82 on that Thursday. And then based on the trades we did today, we're going to be at 13.52, or today and yesterday, we're going to be at 13.52 on next Thursday. So every single week, this is dramatically increasing. We're going to go from $2.12. Obviously blocks paid on the wrong, out of the cycle. But I made about $3 on last Monday. If you count blocks back where it's supposed to be, with that 80 cents over there, where over here, I'm going to make $5.07. I'm basically increasing every single day by almost $2, it looks like. So, if you average it out, it's about $2 a day increase. But, as you can see, Chippy is kind of kicking some butt here, at $5.29, 37% return rate on that, on the payouts. That yield is pretty great. Loving that yield. There's yields that are higher, like NVII. Of course, YEF is a higher yield than PLTW, but Chippy's share price is appreciating, and also it's paying out pretty fantastic. So, all right. With that being said, let's go look at one more thing here. Look at our holdings, and we'll be able to see what's in the red. Obviously, TSII, PLTW, HOW is in the red, and then WMTI is in the red, and everything else is green. So let's go total profit on these. Chippy is $81.13 in total profit, so almost 10% total profit on that, which is great. Blocks is $15.29, and this does count the dividends in, right? So you can see, capital gains is $72, and dividends is $9.13. And you can just hover over these. And of course, I'm getting rained on here, kind of interesting. So it was not supposed to rain till this evening, and it is 10:30 in the morning, and it is starting to come down. So, we're going to wrap this up, and I'm going to move over under in there. And, I've got a big covered patio, but it's about 10 feet that direction, 15 feet that direction. So I'm going to have to move. All right, YBTC is making us money. The Berkshire actually went up, so that's kind of nice, but went down today, but overall it's up. So when we go to sell it, we're probably going to sell it at a profit, very slight profit, but there will be hopefully a profit there when we sell it next week. But you can see that, of my 13 holdings, 4 of them are not increasing. But, the capital gain there, that one hasn't paid a dividend yet. But this one's paid $3.32 in dividends, which is not enough to make up for the capital gain loss of $11.33 there. So each one of these, I'm hopeful that the dividends will flip that to green, but we're going to find out. All right. So last thing, let's go to the dashboard real quick so we can go. Let's go look at our goal here. So I'm at 2% of my goal. I have $1,760 in dividends expected for the next year, but I need to get to $102,960 in order to pay my bills. So, it says it's achievable in 3 years. We're going to see if that's true, because this is not taking into account the margin that I'm adding in. It's only going into that. So let's go over to the goal real quick, and I'll show you what I did. I put $6,000 per month in contributions, and then I just said we're going to reinvest the dividends. Yes. And then I'm expecting no dividend growth. The dividend yield is currently 36%. But it says in 3 years I'll hit it, but it's not taking into account the margin that I'm going to be flipping. So we're going to see if that margin helps out or not, and see if we can get this done faster. Based on my initial estimate, I'm going to get this done between 1.5 years and 2 years. Once I start using margin heavy, and I'm going to dip in to margin, I'm going to start having to pay for it later on. So, and that's going to be fine. That's all part of the strategy. All right. So there we go on that. So let's go look at a couple of these funds here that we're thinking about. So let's actually grab this new one. I haven't looked at it before. OEL. Look at this thing. So this is an interesting fund. So it's down a little bit today, but let's go look at the last 5 years. It's up for almost 10% a year, right? So 46.53% in 1 year is It's a good chunk of that, right? So, and then it's been kind of like flat to down, over the last 3 months. You can see that it's down over the last 3 months, but over the 6 months, so that's the only chart that's down. So, all time way up, 5 years up, 1 year up, year to date is down because, just because this last little dip, but 6 months up, 1 month is up, and then the last 7 days it's up. And we're going to go look at what this thing does here in a minute. So let's go look at the dividends. So it's paying out a 10% yield, which fits our goal here, and those are increasing. So let's go look at these. They flipped. The only reason it fits the strategy now is at the beginning of the year it flipped from quarterly to monthly. So kind of excited about that. And then which is why I didn't know about it before, is because I really don't buy very many quarterlies. I usually do mostly monthlies now. So all right, so let's look at the dividends payouts monthly. Let's go to all distributions. All right. As you can see, they had a couple big dividend spikes in here, but for the most part, we have a kind of an upward trend, or upward to flat. I kind of like the way that this chart looks. I don't see a drop off in dividends, although it's not going to, in here, who knows why this is. And we're going to go look at their strategy and see why they had a couple of months or a couple payouts that were lower. But for the most part, if we had to draw a line in here, across time, it's, we're getting, pretty flat dividends or to increasing. So, and then there's the oddball one that's like, what was that about, but let's go look at the dividend yield across time. So the dividend yield from over the last year has increased. Let's do this. So increased, and then I can change this to the 5 years, and the dividend yield has increased significantly. Year to date, it's increased. The last 6 months, it's increased. And then 10 years, obviously we had some flat years in here, but they've been increasing their dividends. We're going to see if that holds. But I would say, just based on this, I like this, the way this looks. All right. So they have 2 holdings. So they're obviously doing some type of strategy on top of, Vanguard's VU product, which I actually like that product. It's got a lot of the market in it. So I actually had some VU in my Roth IRA. I think I might actually still have a couple shares of it, but it's a growth fund. It does pay some tiny little dividends, but it's been pretty solid for me, and my only thing that I do for growth, which is I have a Roth IRA that I self-manage in my Schwab account. All right, so let's go look at this. Let's go find this fund's website. See what this looks like. All right, before we do that, what did we say the dividend yield was 10.07%. Go put that in here. So there's the dividend yield. Let's put that monthly, and then we'll go find this website. So overlay, there's their website here. And before I do that, let's just open that in a new tab. And then let's go see what Seeking Alpha has to say about this. All right. Large cap equity ETF, passive equity exposure with actively managed risk put selling options. So that's kind of an interesting strategy. They're selling puts, to generate additional income. So that's an interesting. I like that. All right, so current NAV is 52.56. Current market price is 52.61, and then let's see what their assets under management. They got 180 million in there, so that's pretty solid. Distribution rate, they say 10.52. Of course, Snowball's going by has a different formula that they go off of. So expense ratio is 0.79, which is within my range of comfort. I've seen some funds out there with like almost 2% expense ratios, and that's a little bit high for me. But I do like paying for quality people. So they got to make money too, and that's fine with me. I'm okay with people making money. All right, let's do this. Oh, before I do that, go after here, put that in there. Now let's grab the website. Now you don't have to go look it up yourself. You just click on this. You can click on that and away you go. All right. So now you can do some of your own research. So let's go see what Seeking Alpha has for us. I do have an account on Seeking Alpha. So it looks like, see if it logged me in. It did. All right. So a couple things that I like to look at on Seeking Alpha. Number one, their risk level here is a C plus, which is fine. Their ranking, I'm kind of looking at a couple things here on why that might be. Their risk is higher, and it's probably because of their put strategy. Seeking Alpha is pretty reliably conservative on that. All right, so their dividend rank is an A, and I like that. So we can kind of look at like a couple things here. One, I'm looking at 3-year growth, 5-year growth, and then we don't have really 10-year, but you could go look at that. They're growing their dividends over time. Consecutive years of dividend growth is 3 years, and years of dividend payments is 6 years. And this is kind of an interesting thing to go look at. There's always articles in here on each one of these, so you can kind of look at what these things are. So let's go look at the momentum here and see where we're at. So the momentum and underlying metrics grade is a B. That tells me that it's good enough for me. I'm not usually looking for stuff I don't really care about the risk level as much. As long as it's not an F or a D, I'm okay with it. I'm looking for more what their momentum is and what their dividends are. And there's a lot of things in here I can do with charting. I can come in here and see what their comparison is against the price return on the S&P 500 and look at this. It's kind of interesting. Over the last year, they're beating the S&P. So that's good. So let's go look at the 5-year, and they're not beating the S&P, but I bet if you add those dividends back in, we would be right in there. So anyway, you can come in here, play with these if you want to. I don't have a link for Seeking Alpha. I'm not really sure if they're ever going to give me one or if that's even a thing. But if I ever get one, it'll show up in the thing below. So look in the description for any kind of links. And at some point, maybe they will give me a link that I can share this with people. But I just like coming in here, look at the summary, look at these articles. So I will go read a bunch of these. And this one's like buy it, this one's hold it, buy it. And so I'm going to look at this analysis before I make a decision, and see where we're at. So this one's like your chance to outperform the S&P while collecting a 10% yield. I like that. So it looks like most of the analysis on here and articles are positive. So, but we're gonna look at it and go through all these charts and see what's up. But this is another way that I research stuff outside of Snowball. I use Seeking Alpha to kind of come in here and go, is this something I want to add in? So based on what I've seen so far, I'm going to just say this is a green. So let's go ahead and highlight this as green, and we'll add this into the potential. We'll add this to the top of the monthly contenders because that's the first one I've actually fully researched. All right, I'm getting dumped on here. Rain is coming down. I don't know if you can see it on the camera, but it is pouring on me. So I'm going to go ahead and stop this. Happy investing, everybody. Have a great weekend, and we'll see y'all on Monday. Thanks for tuning in, and see you then.